Okay, welcome to your second weekly outlook. I posted a video on the channel last week doing a weekly outlook for DXY and GU and what we were to expect for the two pairs. If you haven't watched that one, I suggest watch it for context, but I'll do my best to explain. So last week we were trading at about this area. We only had this candle printed in, and we were calling DXY to go lower. As you can see on screen, we've got the range high delineated as well as the range low delineated. And our trade idea, or the logic behind expecting it to go lower, was our internal range buy side liquidity, which got ran, as well as our order block, which was very clear on this time frame, as well as the order block, and the fact that we were in premium relative to this range, right? Premium. So the objectives that I gave last week initially was just this internal low. I was expecting us to run it. And then we were allowing for it to come down to this 102,800 area. And as you can see, fortunately, and I say fortunately because any sort of outlook that anyone gives you should be considered as speculation and just a perspective. But fortunately, we had both of our objectives ran through. Yeah. So I want to take a look at this market again and discuss a little bit about what I will be expecting for this week. The chart's going to get complicated in a moment, but don't be put off by the amount of drawings. I will do my best to explain. Okay. So let's get rid of those. No, keep those. Get rid of these. So, seeing as we've had both of our objectives ran through, and we've attacked the sell side liquidity which we had marked out last week, I want us to pay attention to where we are currently relative to this range. And when I mention this range, I mean this range high, that range low. We've got the Fibonacci chart, and you'll notice that we are at the 50% level. This is equilibrium, right? Now, a common characteristic of price when it gets to levels like this is that it builds in what we call fair value, or it starts to accumulate. Simply put, it'll start to consolidate. So I want us to go forward with that in mind. What I'd like to note is we haven't attacked our third objective, which was the sell side liquidity at around about the 102 area. We haven't attacked that, but we found support at this daily bullish order block that I've got marked up. Okay, we found support there. I want to pay close attention to our candle body closure in our current range. I haven't marked out the entire range, which would be from this high to this low, but I'm marking out this high for a very specific reason. Okay, inside here, our little square rectangle box, this is what we refer to as a new day opening gap. They're very similar to fair value gaps. They operate in the same way. So we've got that marked out, and I'm paying very close attention to where our candle body closure is in here. Notice how we close above the 50% level of this gap, which is marked out by the midpoint line. To me, this is an early indication of bullish price, not necessarily bullish to the point of a complete reversal, but bullish to the point of a retracement. So I've got a couple things marked up. We're going to be taking a look at this range in here, from this high, which is 104.292, to this low 102.358. The reason why I've marked out this range is because it is our most recent stop hunt. The high on this runs the internal highs within here. where you can see these green candles. And then it trades away from that point with quite a bit of displacement. So inside of this range, it's very simple. We've got our daily bearish order block marked out. We can see the displacement away from it. We have got our sell side liquidity, which we targeted last week. We've got our fair value gap marked out by these two red lines, red horizontals. And then we've also got this breaker block range. I'm not necessarily going to explain them just yet, but consider them to be a type of order block. Okay, so we've got our breaker block range. We've also got our mitigation block range. And above this eye, just using simple logic and common sense, there is resting liquidity, which is internal buy side liquidity as resting liquidity. And below this low, we would have external relative to this range now, external sell side liquidity. What I'm expecting for this week is, seeing as we are bullish at this level, I'm expecting price to form a retracement and trade further up into the range. Now, I cannot give you the exact number at which price is going to stop, but using our tools in conjunction with one another, the breaker block range, the fair value gap, the mitigation block, price doesn't need to come all the way up to this area where the order block is, right? If the intention is to push price down, it won't trade against its own intention. So I'm paying very close attention to this breaker block range, and I'm paying very close attention to this fair value gap. What I think we'll do is we'll form some small sort of consolidation, maybe on Monday, and then between Tuesday, Wednesday, and Thursday, we'll form a high within this fair value gap. I'm not really expecting it to trade higher, but I do want the period raise marked out there just in case. So relative to this range, the 50% level is our equilibrium point. Below it is discount. Why am I pointing this out? Because below it in discount is going to be prime time for buys. It's going to be, you're going to find that the higher possibility trades or higher probability trades are going to be buys up until we reach at the 50% level or above it. And we can see that our fair value gap lines up with it. So I've marked out this level, which is just the opening or the beginning point of the breaker range. I don't necessarily want to mark out the top. It's not necessary. We're just focusing on this fair value gap for this week for DXY. So to form something kind of like this, a high, and then return and continue to target our sell side liquidity over here, and eventually our range low, barring stalling time within here, because we've got this fair value gap. So yeah, that will be what we're expecting for DXY this week. To those that will be watching this privately and that know me personally, you'll be receiving a copy of this chart as a reference. But yeah, the next thing I wanted to look at was Nasdaq, actually. Seeing as we are expecting DXY to be overall bearish, but initially short-term bullish, which is our retracement that we're expecting, I would be looking at Nasdaq to be bearish initially. So a little bit of intermarket analysis. Nasdaq, we view Nasdaq as a foreign currency in terms of DXY. It's the same thing as looking at EU versus the dollar. You know, if the dollar goes up, simultaneously EU will trade downwards. So Nasdaq being US NAS, which is the actual stock basket against the US dollar. If dollar is going up, we're expecting Nasdaq to trade lower, right? So things to note on Nasdaq. I've marked out our range which we're going to be focusing. Things that I want to focus on is the order flow is bullish. We're constantly forming higher highs and higher lows, and none of them are being violated, right? What we've had is we've had our buy side liquidity above this high, which has been purged. You can see the momentum at which we trade away from this area within the week. You know, it's quite a large wick. It's about 35% of that candle is the wick. And we eventually close far below this point. So I'm looking at this as a liquidity run on buy side. We've got resting liquidity at the range high. We've got resting liquidity at the range low. Over here, within our breaker block range, and this could be a little bit of foreshadowing for DXY. As you saw, I had a breaker block range marked out on DXY as well. Notice how we sweep liquidity within the breaker block, but we close above the 50% level of this breaker block. 50% being the 50% of this candle, which is 17,467. Right. Look at the body closure of these candles when we're sweeping liquidity. It closes above that. Very early indication that we are going to be bullish on Nasdaq, and you can see how price then reacts after that. But we've got the sell side liquidity purge over here, as well as this down close candle, which I've marked out to be our daily bullish order block, which hasn't been tapped into, by the way, which is why it's a large interest for me, as well as our fair value gap, which we have been trading into, but we've been trading above the 50% level of that. We've got our internal sell side liquidity as well, which hasn't been purged at all. You can see it made an attempt over here, failed, reversed, and then swept over here. So for Nasdaq, what I would be expecting for this week is just a retracement back down into the range. Remember now, we've got a 50% area, right? Above 50% is premium, and in premium we favor sells over buys. It's not to say that it won't buy, but we'll favor sells over buys for this current market. So I'm expecting the first half of the week to be bearish. I mean, Monday, there are, if I take a look at for Monday, if we take a look at the news drivers that we have coming out, Monday has nothing. So it's not going to be a high probability day to trade. You know, I'd be focusing on CPI and all of these other high impact new news events, which only come later on in the week. So Tuesday is a pretty hefty day. We've got core CPI as well as PPI on Thursday. Wednesday we've got a little bit of action with our bond auctions, but I'd mainly be focusing on Tuesday and Thursday. The high of the week will form on one of these 2 days, possibly Wednesday, but I'm gunning for one of these 2 days. It's not to say that we will completely be bearish on Nasdaq. We're bearish up until we get to this point. I want to see price sort of find support in this area, because we've got all of these PDRAs lining up, and the narrative is that this market is bullish, because we've been going up for quite a while, if we take a look. So keeping that in mind, Nasdaq early week would be sells, maybe something like this, down into this area, and then eventually targeting the range high. I should be able to post a midweek review, but if I'm not able to, I want to see the candle body closure at our order block level and at the liquidity level, as well as the 50% level of this. I don't want to complicate it, but to find that, all you do is you do your fib, and it'll mark out the 50% level, which is 17,760. I want to see our candle body closure at that level. The liquidity isn't necessarily that important, but if it lines up with these two, if the candle bodies are closed above our order block and above the 50%, I think that we should see some momentum. And we do have some really strong news drivers coming out this week, so it would make sense. But yeah, that is what I'm expecting for Nasdaq for this week. Initially, sell side should be targeted, and then later on, buy side. It all depends on the momentum of the market. The last one that I wanted to look at was GU, and we were taking a look at GU last week. I had marked out our previous weekly high. If we find where we were, that was the third. That was Friday. We were trading around about here, and I had marked out the previous weekly high. Now, the narrative for DXY last week was that it was going to target sell side, and naturally, because we're trading GU, which is against the dollar, this should target buy side. The only thing that I wasn't necessarily certain about myself was the momentum at which price was going to do so. And yes, last week was NFP week, but at the same time, we've had multiple checkpoints in this area, highs that haven't necessarily been swept, right? So narrative for last week was, if I add those PDRs, put these off as well as these. The narrative for last week was that we traded into this fair value gap and our candle bodies were closing above that 50%. Even though it didn't happen initially, it was reacting off of it and then closing above that 50% level. We failed to take this low in here, so to be honest, this should be used as the range though, but I guess we used this one. The idea behind the trade was that we were trading in discount relative to this range, right? We're trading in discount relative to this range. There's the 50% level. We've got it marked out. Below it is discount, above it is premium. We were trading in discount. DXY was giving us a clear indication that we were going to be bearish. So therefore, being in discount, we buys are high probability, and the intermarket analysis with DXY, I was expecting us to run some sort of either internal liquidity relative to this range, which would mean this high which I had marked out as the previous weekly high, or the highs that I had marked out in here as internal highs, and with the exception of the external high as well. So I think that makes sense. I had this marked out as a point at which we could maybe see some stalling. You can see it kind of traded into the formed a new candle, traded a little bit down, had a little bit of a retracement, but nothing too serious. You know, for GU, we absolutely smashed our objectives. If I can get all of these back on and take this off. GU was simple. We were just paying attention to the fair value gap that we had in here, as well as our breaker. Our mitigation block in here. We're paying attention to that, and we were expecting this to support price once we crossed over. You know, we had our liquidity targets, and like I said, price absolutely smashed through them, as you can see. For this week, I haven't really marked out anything on this, but I'm going to give a general thought idea. We are currently trading at external range liquidity, so above the range. Normally in this scenario, I would expect us, once we've swept this, to form some sort of swing high in here, just a simple 3 candle pattern, you know, swing high, and retrace back into the range for continuation upwards, which is what I think is going to happen here up until DXY reaches its targets. So for this week, for GU, I'll be expecting, I can't call this high, but if it is, I'll be expecting a retracement down into this fair value gap that we've got here. Maybe I should mark it out. I'll be expecting a retracement down into this area. Right? A retracement down into this area. I want to watch how we trade at 50% of this level. I want to pay specific attention to our candle body closures. I do think that the start of the week, seeing as, again, we have no news drivers on Monday, I do think the start of the week might be slow, specifically Monday. So we'll see how much time we actually spend above this liquidity zone or this area of liquidity. We'll see if we do consolidate or not above this area, right? Even if it does, I'm still expecting a retracement of some sort. Another thing I want to mark out is this candle. I know it's quite large, but I want to mark out this candle as our break range. If I can get it, it should be D1 breaker block range. Right? Inside this zone, how I use this zone is it is very likely for us to find support within here, right? So I'm not expecting us to come all the way down. We're using this low that we have in here, external range outside liquidity, and our current high. This is external range liquidity that's been rammed now. We're going to be using our current high as external range buy side liquidity, right? We'll be using this as external range buy side liquidity. And our target will be into the range, supported the breaker, and paying attention to what happens around the 50%, and then targeting our external range buy side liquidity. Because I do get the sense that this market is bullish. If DXY, like I said, hasn't completed its objectives, this should still be bullish. And we're seeing quite a rally, quite a bit of momentum out of the range currently. But yeah, that is all that we're looking at for this week. We've done DXY, we've done Nasdaq, and we've done GU. I hope it was insightful. I hope you find these videos useful. It takes time to make, but no complaints. I do enjoy making them. Should there be a midweek review, I will recap on this. I'll take a few screenshots so that we have the befores and afters. But yeah, I hope this was insightful, and I will see you guys next time.